Welcome into the open where we get technical. You should have investments in long-term growth. All right. Great opening. How's that quote on investing in long-term growth doing today? How are we doing on that? How are we doing on our growth stock portfolio, ladies and gents? Thank you so much for joining us. This is Get Technical. I'm Neil. I am not a financial advisor. I'm a complete idiot. And I'm learning how to trade and sharing that from a technical perspective with you guys. With me, as always, is Spencer Israel. And later today, JC Peretz. We're going to talk about some sell-off action. Maybe not the textbook definition of a sell-off, but we're going to talk about those big red candles that you see. I'm going to talk about some positions that you guys might know about that I've exited, one of which is DocuSign. So I'll tell you that right now. I'm stopped out of DocuSign. That's all there is to it. But I also want to put things in perspective. I think the pre-market prep, those of you that were watching this morning, I loved what Dennis had to say about pre-market prep. Yes, value stocks. We're talking about the long-term portfolio. Value is doing better. We're seeing somewhat of a rotation into value. Growth is getting hit, but guys, we got to look at the big picture. This is about the long game and some short-term wins. So how can we turn this down market into short-term wins? So what I want to ask you guys, I don't see the chat right now. Let me see. All right, cool. Guys, burnout. No, I'm not trying to sell off. I'm just stopping out of my short-term trades. So I want to know from ladies and gents, let's do a quick poll. We got a couple things going on today, a couple polls. But the first one is panic sell or buy the dip. I'm not trying to be biased with the way I'm asking that question. Panic sell or buy the dip. One if it's panic sell, two if it's buy the dip. Let me know if you got to go number one or number two, guys. Both. David, that's the right answer. David wins a compliment from Spencer Israel. 1 and 2. That's right. David's got to go 1 and 2.
Those are hard to come by. By the way, nice background today.
Yeah, let's guys. Today is about your attitude. Today is all about your attitude. All right. Tell me, this is like a Rorschach. Tell me what you feel with what's going on in the markets and when you see this image. What does this image tell you? Champions in the chat. All right. This is a picture of me back when I was an undergrad. I was shooting a student film. And we just added we did some special effects with the rats. Yes. Arnold, they're not his pets. Don't cringe, Paige. They're not his pets. Guys, right now we are looking at opportunities. We are looking at this as opportunities. We are not going to be afraid. All right, Spencer, let's switch us back up. I want to share my screen, please.
Oh, sorry.
All right, guys. DocuSign. As you guys know, I do these short-term trades, these swing trades, and I like to set stop losses, actual hard stop losses, because I can't pay attention all the time. I got stopped out of DocuSign. That's where I'm at on that one. We mentioned it last week. I said it was my favorite one. It was forming a great pattern, but it doesn't always work out, guys. It's not 100%. So cup and handle below our support line here. I'm out of DocuSign. All right, FPRX also going down, guys. ARK is getting hammered. ARK is absolutely getting hammered. So let's look at that over a long term in a moment. FPRX took profit, got out. Let me see. What was my other one? Oh yeah, Exxon. So XOM, the oil stocks, all of them have been showing breakout patterns. Not all of them, but like a lot of them that I've been sharing have been showing breakout patterns. So that's why you've been seeing a lot of oil stocks on the show, because I'm all about looking for the bottom and looking for opportunity to get a quick IV boost, implied volatility boost on a call option. Right? So that's all about timing the breakout so that you can buy a call contract at a cheap price, because we're looking at this sideways volatility, which makes implied volatility IV cheap. So you can buy options at a cheap price and then make money when stock goes up and then get out. XOM, I'm holding right now. I'm actually going to sell it as we speak. And then I want to look at our ETFs. XOM out. Let's take a look at the ETFs. ARC-W. Spencer, you're in this one, right?
I am most certainly an ARC-W.
Let's use the Bollinger Bands on this one. So for context, ARC-W is still trading within a range, right? ARC-W it has crossed the mean. It has gapped down, crossing the mean on the Bollinger Band. That mean is the 20-day moving average. It has crossed down. We are looking for two things. One is a touch to the bottom for a potential bounce. The second thing is, if we are in fact entering a sideways or even a downward trend, we're looking at this middle line, this 20-day, to start curving down. This is an early indicator. Let's go ahead and add our EMA. 20-day EMA is curving down as we speak. Man, today is actually pretty rough. Cringe on the Conan the Barbarian is not wrong. So what I'm going to do is actually, I'm not really sure what I'm going to do, Spencer. What are you thinking? What are your thoughts on this at a time like this?
On ARC-W specifically, or like all your like growth tech?
The ARC-W specifically.
Yeah, I'm not selling. It's just to sum it up, I'm not selling. I think back to when I bought this, and it's been a massive winner. So what are we down? $30 in the last week. That's not a lot when you zoom out. Look at the weekly, look at the monthly. That's not a lot. So yeah, it looked painful today and yesterday. This whole week, but I know, like, I talk to myself when I buy things, right? And I know what I said to myself, and I said, "You're buying this for an investment. This is not a trade. If it was a trade, yeah, oh yeah. If this was a trade, I'm getting out today, or yesterday, or tomorrow. I don't know, sometime around here. But it's not a trade for me. An investment is a big difference.
Yeah.
So hey, did we just turn green on the for ARKW today? No.
I have to go to the 4 hour.
No. I'm looking at a week. What am I looking at? Like a weekly? We did not turn green. I don't know what I'm talking about. No, I'm not selling is the answer.
Okay.
Because I know this is par for the course.
Yep.
If I wasn't convicted, then maybe yeah. Like if I bought this to hop on the gravy train, because my friends are buying it, or Neil was buying it. Well, same, one of the same, right? Neil? Yeah. Okay.
Well,
okay, maybe not. Then maybe I consider, but that's not why I bought it. You got to know why you own what you own. It's not why I bought it. So there are other things that I'm not as convicted in that, I'm getting hit pretty hard here, that I'm thinking very hard about selling. Or ARKW is not one of them.
Yeah, I got a couple too. So one was DocuSign that I was feeling really good about. Nvidia, I still fundamentally like long term, but again, this is a failed breakout. So this is something where you can look at taking a contrarian play. Like people that were going long on this, this is an opportunity to sell calls, for example, at a higher strike price. So people would have been shooting for this type of price target. So for using Nvidia as an example that you can use with a lot of stocks that have these breakout patterns that we talk about every single day. They have price targets that are based on the pattern. In this case, is a bull pennant. This price target is based on the measured move within the pennant. Plenty of people saw this. This is a super high visibility stock. High visibility stocks are the best ones to buy options on because you know that there are a lot of eyeballs on it that are going to react to any news or anything that's happening with the chart. So in this particular case, a lot of people are holding options or were buying options shooting for this price target. At this point, are we worried? At this point, there is an opportunity to sell a call for some quick money. But yeah, I mean, today we're down. What I want, the thing that's given me the most solace right now is SPY. When I close out these other technical indicators and just look at the Bollinger Bands and look at the range that SPY is trading in, we've had previous dips that have touched this lower blue line. If you want to play it on the short term, puts for sure. You can hedge your position right now. Hedge your positions right now and turn this into a short-term profit opportunity. But I'm not seeing anything here that doesn't look like what's already happened in the past with a swift return back up. So with these bands, with SPY, and with other stocks that look like this, there are some other just steadily trending upward stocks that we can look at. If it touches the middle line and then starts to go back up, that's an entry. Or if it crosses the middle line, that's a short opportunity. And then goes down to the bottom line, you're looking for that bounce. That's once again bullish. You're looking for a price target at the middle line. And then you pass the middle line, you're looking at a price target above that line. All right, guys. So my big pick of the week got stopped out. I am going to do two things. One is number one. Today is your opportunity to roast me. I kind of feel like I've gotten too cocky lately. When there's a sell-off day like this, it's got me a little bit shook. Got to be honest. All right. So I'm trying to jazz myself up and stay in my positions as long as I can when it makes sense. I had my stop losses on my short-term trades like DocuSign, saved me from losing a lot of money. But on a day like this, it's humbling, and it's good to make sure that you're reassessing what you're doing. So, Spencer, would you mind sharing in chat a link to the Get Technical Improvement survey? Guys,
yes, give me a minute.
This is your opportunity to roast me, to roast the show, and tell us what we can do to improve. And if you take the survey, we'll enter you for a drawing that we'll do live tomorrow. Thank you. So you can win some free swag. So guys, click that link, fill it out really quick. Should take like 2 minutes. 2 minutes, and you enter to win free stuff. All right. Yep, today's a down day. Not much to say about that. I mean, really what you can be doing is buying puts. You can be switching out into value stocks. But right now it's risk off. More risk off than previous days that we talked about. I'm not looking to do anything crazy today. All right, so what else do we have to cover? That is pretty much it. You guys, we can go over some tickers. Does anyone have any tickers they want to look at?
Here, I'll give you one if you want.
Yeah, sure.
Do you want to look at CCIV?
Yeah, I
this
mean,
one,
but that's the yeah.
this one
horror
is
show.
this is brutal. This is what you get for going from $10 to $64 in a month and a half, right?
Yeah. So anyone in CCIV, I like what I've seen a lot lately is people that are very, very distraught over CCIV because you had absolute euphoria and then an absolute turnaround, which is very distressing for folks. Today is very distressing. So guys, who was in CCIV? Who's been watching this? Give me a 1 if you were in it. And I see your stocks. We've got Neo to talk about. We've got NSPR to talk about. We've got Apple. I think that's Apple. APPL. Do you mean AAPL? And Zomedica. I mean, this thing just sucks right now. So we're not in like truly oversold territory. This is a wait and watch. So we've got a gap. We need some time, right? We're looking for hopefully some sideways consolidation over a period. There's no telling how much further south this can go. There's no telling, but we need to wait and watch on this one. Yeah, Sam, I don't know where the bottom is on this. This is a meaningful price level. All right. So we had a period, a corrective phase right here. So we had a short impulse, corrective phase, impulse down into somewhat of a corrective phase, impulse. And then in this corrective phase, it seems like the buyers are holding. All right. So what we would be looking for at this point is a continued corrective phase. All right. That's the bull case for CCIV. And then if it starts to go that it continues down, then it's just, I mean, you can feel free to short it. All right. So, okay, Pam, we'll do MVRL. Well, actually, I mentioned a couple of Pam. So hold on one sec. Let's do Neo. Erase all my stuff. Super oversold. One thing to keep in mind. People are not going to forget about this stock. This is a stock that has a lot of eyeballs on it. As you know, a ton of the technical traders are in this stock. So what we are looking for is after this impulse, we're looking for some form of corrective phase or some form of consolidation. All right. So this is down just like everything else in the market. It's created a gap for us, which might be future opportunity. So right now, risk off, using this oversoldness as a potential entry point later down the road. We need to find the bottom today. So I suppose that's really the theme, is finding the bottom for most of these stocks. We can see that this sideways consolidation was a significant corrective phase, followed by this nice impulse up that hopefully you got into, corrective phase, and then we've entered this downward area, this downward space. All right, so we're looking for a corrective phase, hopefully at this level to enter. But at the end of the day, it also doesn't matter. If you're out of the stock, it doesn't matter. As long as it finds footing and we start to see bullish indicators, you can still time a nice breakout on Neo. It's still a very technical stock. All right, so let's go Workhorse. We've never talked about that on the show. So Workhorse, again, this is one where we've had a nice impulse up. We had some profit, some significant pushback where people were saying this was overvalued. It was overvalued here, and then the battle started halfway up. We like it to be high and tight, right? When you're looking at a stock going up, you want it to be like a nice staircase. You want your impulse, your corrective phase, impulse. And by the way, this is all coming straight from Chris Capri, Second Sky Forex. Great educator on technicals. He uses this sort of impulse corrective phase phrasing to look at these charts. So you want the staircase. But sometimes you don't get a perfect staircase. You get a sell-off, and then you get the corrective phase following it. This is, the market has said, this is just way too much value. I'll meet you somewhere in the middle. tougher to trade that. That's not simple. When we've got an up and then a corrective phase, which makes normally what you're looking for is just a nice little bull flag during that corrective phase, high and tight, little sideways consolidation. That's easy. You can just time a call option there. You can time, I mean, depending on what time frame you're looking at, like, so since this is the daily chart, I'm a swing trader, I would be looking at options that expire 60 to 90 days from now. If you're looking at this over a shorter time frame, so let's look at NEO on a super short time frame. Over 5 minutes, and let me expand this, you see these structures once again. Impulse up, short corrective phase, impulse up, corrective phase, overvalued, down, impulse up, once again. During this corrective phase, let's look at the nice easy one first, the nice high and tight flag. You've got a nice flag right here. This is something where you can time a nice call option and get a serious amount of IV, right? Never gets any volume in his huge potential. Have you ever looked at? So Telos, TLS, sector comp. Oh, comparable to PLTR. Okay, so we're looking at Telos, just similar, in a similar space to TLS. A similar space to Palantir, which is big data collection and distribution to government and private sector. I'm assuming that might be the same with these guys. Design provision of advanced technologies, deliver solutions, and empower and protect the world's most demanding enterprises. Yeah, that sounds like Gov contract. All right, so let's look at the daily. Wow, this chart looks familiar. One thing I'll say. I talk about double bottoms. It's very easy to look for double bottoms. We look for the juiciness at the bottom. This is the double bottom at the top. So this is a double top. So what am I doing? So you can look at something like this and see a potential reversal. How far is that going to go? It's the same as always, except we're doing it from the reverse. It's the measured move added to, in this case, like the, I don't know what you would call that. It's the swing low added to the swing low. So I would say price target, if you're looking to short TLS right now, be about $27 from its current point. Almost 10%. How long will that last? We don't know. We don't know how long it will stay in a downward trend, but that's what it is. It has officially entered a downward trend, which you can see from my exponential moving average that it's really started to curve down, So overall, I mean, we just got this thing in a downward trend. Doesn't mean it will last forever. What it may mean is you get a period of sideways consolidation and a return to the longer term trend, which has been this upward one. Good thing about this, creating opportunities. Yeah, definitely. I mean, this is a short play. It is a falling knife. So the good thing about times like this is they create downward impulses, and then eventually the bulls come in at support, which will hold the stock for a period of sideways consolidation. What that does for options, actually, I mentioned yesterday, we would talk about options. What that does for options when it's trading sideways is lower the cost of IV, or lowers the IV, which lowers the cost of buying options contracts, right? So the longer the sideways consolidation, the cheaper you're able to get options contracts and then time the purchase for the breakout. So we're really laying in wait and watching for opportunities. Okay, so what else we got? We can look at Bitcoin. Talked about it yesterday. Yesterday, when we had Alex Cole on, we talked about this candle. And Alex Cole liked this candle because it showed that the bulls were pushing this thing back up for a close well above that wick, well above the 50% point of that wick. So let's look at this in terms of where will it go down? Where will it hit? Where will it retrace? And we can look at Disney. Yeah, I mean, Disney is a shining light. So let's look at the Fibonacci retracement tool to give us an idea of our key support levels. Drawing at the low of this first candle starting this trend, the sustained trend, you can see that it's a sustained upward trend because it's mostly green candles, and then it gets a little bit red here, and then we got mostly green again. So we've got a trend there, and we can see that we had a little bit of a touch just about at the first support level. And in fact, if I actually drag this down a little bit, I think we might get a better picture. Maybe at these candles. Where does it want to be? Even a little bit sooner. Okay. So yeah, this is actually more accurate. So we saw this really long, tight sideways consolidation. And then we saw the candle start to get bigger and bigger and bigger and then turn into a little bit more of a trend. So this is looking at the trend that started November 5th, 2020. We can see that there's been a big sell-off, the biggest sell-off since Bitcoin really started picking up at the end of last year and the beginning of this year, and that we're still touching this support level. What might happen is we might get down to the next level. What might happen again is we get down to the next level, which is 50%. And you can see that these line up with key points. So this first 38% level is lined up with this high. This is a previous all-time high. And then the next level is in this range of consolidation. So in this range of consolidation, we went a little bit sideways. It was a corrective phase before we had a really strong impulse up that lasted quite a long time and covered a lot of price points. So Bitcoin, is it a buy the dip moment? For me, it is. I bought about $1,000 worth of Bitcoin today. I'm going to watch it. I'm going to see if we get down to this next level, which is the previous all-time high. And if it touches that level and then shows signs of bouncing back, I'm going to re-enter. I'm going to pile in, actually, more. Because overall, I'm long Bitcoin. MJ. MJ is the cannabis ETF. I mean, this one is just going to be super volatile. I mean, among the ETFs that I hold, MJ is one of them. This one's extremely volatile. So I want to look at it with some moving averages. So we can see here, what I have on my chart here is this yellow line. This is a golden cross. This is kind of old school. A lot of people hate on moving averages, but I think it's still useful to put things in context. The golden cross is when the shorter term moving average crosses above the longer term moving average, showing that there's a turn up from this longer term trend that we've been stuck in. All right. So you can't see it here, but it's the 50 period and the 200. So you can see that the 200 is a laggard here and it's starting to curve up, but the 50, this yellow one, crossed above it. And that's a kind of an old school technical analysis tool to show that a trend is shifting. But man, wouldn't that have been a great entry point? We have an impulse up, we have a period of consolidation, and then we have this confirmation from the 50 and the 200 crossing, the 50 crossing above the 200, that this period of consolidation is probably going to end with a breakout to the upside. So, I mean, if you're talking about call options, here's the play with MJ. Would have been get in the money call options just below this price. So you're looking at a strike price just below this consolidation, right? Just below this period of consolidation for your strike price. For your expiration, if you're swing trading, you want something between a month, like a month and a half to 2 months. something like that, at least a month out to give you time for decay. Because as you know, the longer you hold an options contract, the more its value goes down. So this was an opportunity with MJ to time a breakout from this period of consolidation, this little flag, and then make a ton of money on IV and then sell it as soon as what I would say is with the stuff, if you're new to it, as soon as you see something like 20%, go ahead and sell. But if you're watching the charts and you're able to see when the impulse is starting to end, if you start to see a red candle form like this and you see it starting to enter another corrective phase, sell then. Let that be your exit. I mean, there's no reason why with an options contract that you can't make triple digit returns in percentage. Okay. Tesla halted. I don't know if I can see that. Spencer, did Tesla halt?
No. I did it? No, I'm not seeing that.
Steven said it was. I don't have alerts set for that on this platform. I don't have Pro open. If I had Pro open, I would know. All right, guys. Now is the time. Hopefully you guys got that survey. So guys, Spencer, once again, can you just drop the link to that survey in so you guys can help us improve? Fill that out to win free stuff from Benzinga. We will send it to you. It is now my great pleasure to bring on someone who is an idol of mine, who is fantastic at technical analysis because it's what he does for a living. In fact, he founded a company based on it. To take a look at what's happening in the markets now, to talk about opportunities, and to talk about what he sees overall in terms of trend. So let's bring on JC Peretz of All Star Charts.
All right. What's up, Neil?
What's up, man? How are you doing?
Good.
I got to be honest. I was talking a big game, but I got a little bit shook as I started looking at these charts, man.
Which charts? What are we shook about? Let's discuss.
It's these Kathy Woods ETFs, man.
Yeah.
Kathy Woods. I'm susceptible, you know, it's the psychology of trading. I am susceptible to getting a little bit shook when I see myself in the red. And I'm hoping that you can put things in context. I'm looking for some technical therapy right now.
Yeah, I mean, listen, we're seeing sector rotation at its finest. Sector rotation is the lifeblood of any bull market. And you look at some long-term laggards turning into leaders. You saw leaders turning into laggards. Look at small caps getting crushed, micro caps getting crushed. These things are monsters. But you know what weren't monsters? Energy, industrials, financials, even European banks making new highs. So it's really a function of sector rotation. It's the lifeblood of a bull market. You're seeing it right in front of you.
Well said. And I know that the last time you were on, you were talking a lot about energy, and it seems that we're seeing that continue to manifest.
Yep. Chevron, we love it. ExxonMobil, we love it. We've been super long. Crude oil. We just took half off the table in on the options trade. We have calls. Now it's a free lunch, right? Because when our options premiums double, which they did pretty quickly in crude oil, now we have until next January. So now we have literally a free option that can go to the moon. It can go to zero. We don't lose anything. It's really a great place to be. And, you know, the discipline of taking half off the table, you know, it frees your mind, helps you sleep at night. It helps you stay in it longer. All of those things, I encourage it. We're very disciplined when it comes particularly to options. But yeah, we're seeing it. Energy. Warren Buffett is YOLOing Chevron, right? So, I mean, there's a lot of big money flowing into this energy. I think that the commodity super cycle has begun. I've been saying that. We continue to see evidence. Base metals keep ripping. Energy continues to do well. The agricultural commodities, I think the commodity super cycle is upon us. You expect to see people complaining about their gas prices rising. Mm-hmm. You can choose to do that and be one of those people that just complains about high energy costs, or you can be one of the people that are celebrating it. This is America. We have the ability to invest and take advantage of higher energy costs while people are busy complaining about it. We're happy about it. We're rooting it on. The higher the energy prices, the better.
So for folks that are looking at potentially entering the energy stocks, purely from trading stocks, what types of things should they be looking for in the charts?
Look at the Nifty Energy Index. India has been a tremendous leading indicator in the bank space, in energy. Look at Nifty Energy breaking out of a multi-year base. Setups are rarely this clean. Look at Chevron. Look at Exxon Mobil in particular. I'll give you the exact levels on Chevron. Let me just pull it up real quick so I get it right. Sorry.
Do you want me to share my screen? I can pull it up on the chart.
If Chevron is above 96, we want to be long with a target of 123. And if Exxon's above 50, we want to be long with a price target of 66.
Let's take a look. I'm going to share my screen. I've got the charts. Let's do one of these. Let's go full.
Yeah, look at that base. Look at that beautiful double bottom, Kardashian bottom. Call it whatever you want. It's a bearish to bullish reversal. Energy has been the worst place on earth. Energy has been worse than bonds, worse than gold, worse than banks. There's nothing worse than energy. Energy can double from here and still needs to rally like another 10, 15% just to get back to former highs. Like, that's how bad energy is. But everybody knows that already. It ain't a secret, right? Just like everybody discovered that Kathy Wood's a badass. Well, now you're paying for discovering it too late. Not you, but like people who have not been on this. People who have not been on this train for a year. Like, where have you been? You should improve your relative strength scans. That's probably what you should do if you're discovering them now, because these things were popping up a long, long time ago. But yeah, energy. If we're look at Exxon, if we're above those former highs, $50, I think you can own it. And what does that translate into? 30% of upside. That's pretty solid. And on the Chevron, on the CVX, if you want to join Uncle Warren on that train, also looks good. It's a similar trade, right? Obviously, to behemoth energy integrated companies, monsters. And then look at financials. Hello, talk about horrible places to be. Financials have done nothing for 14 years. And people are like, well, JC, financials didn't peak until the summer. Well, Lehman Brothers and Bear Stearns peaked in January and February of 2007, which is the opposite of relative strength. This is relative weakness. So Bear Stearns and Lehman peaking in Q1 of 2007, that was the heads up. Financials peaked that summer. The S&P 500 continued to make new highs into 2007 to October of 07. By then, Lehman and Bear Stearns were already crashing. Financials had already peaked on a relative and absolute basis. Classic. So anyway, it took 14 years to correct that, and now we can move on. 14 years is a long, long time for demand to finally be able to absorb that supply. It did it, got it done. Now we can move on. So the trade's very simple. Mm-hmm. If financials, the XLF, is above those 2007 highs, let's call it 31, we need to be long. And if you're not long, I think it's irresponsible, quite frankly. If we're not above those levels, then we can't make the argument that we've broken out, right? If we're below those 07 highs, then that thesis of a 14-year base breakout is invalidated. So you have a very well-defined risk level, because remember, Neil, it's not about being right. It's about making money, right? So we want to be able to find opportunities where the market, we know what the market needs to do specifically to prove us wrong. And in the case of Exxon Mobil, it's break below 50. In the case of Chevron, it's break below 96. In the case of the XLF financials, it's break below 31. JP Morgan, which has been a long, if we're below 141 in JP Morgan, then all bets are off. We are making new highs, which we're happy about, of course. So listen, Neil, there's nothing wrong with a market where some stocks are going down and some stocks are going up, right? Mm-hmm. There's nothing wrong with that. I mean, go back in history. Some would actually call that normal.
So with that said, you mentioned folks need to brush up on their market breadth analysis. What is the first step toward doing that? First off, how do you define market breadth? And then what is the first step toward folks being able to do that on their own platforms? Because
remember, people talk about the stock market, like, oh, the stock market, the S&P, the Dow. What did the Dow do today, right? People talk about that stock market like it's a thing. Yeah. But what I think gets forgotten quite often is that it's a market of stocks, right? There's a whole bunch, there's all kinds of sectors, banks and healthcare and right? Energy, technology, consumer discretionary, staples, utilities. There's all kinds of different companies, right? If more of them are going up, then the indexes themselves are probably not going down, right? If most of them are going down, then probably the indexes are going to have a hard time going up. And you can see that deterioration. Like if you were buying stocks in February of last year, it's because you were ignoring market breadth, right? Market breadth had already peaked way before that. Like the entire market was deteriorating throughout December and January and into February, well before any coronavirus crash. Like if you missed that one, I would highly encourage you to reevaluate your process and put processes in place to identify that weakening market breadth and the opposite, the expansion of market breadth, particularly the breadth thrust that started in June that really started soaring, and then the breadth thrust kept accumulating from there, September, November. Most recently, we got breadth thrust and energy, and now look what's going on. And these breadth thrusts are huge expansions in participation. You know, percentages of stocks getting overbought that we haven't seen in decades. You know, last week we saw the most amount of new highs ever, right? That's breadth expansion, not breadth deterioration. So you want to look at it both ways. And the fact that now energy and financials are participating, European banks, emerging markets breaking out a 14-year basis. These are new sectors participating. These are new stocks participating to the upside, not fewer. And the rotation out of some of the big winners and into new winners is classic behavior of bull markets. Classic, you know.
So JC, for people that want to take a look at what's going on in sectors, which sectors are starting to accelerate and starting to meet the you know, whether it's a pattern or whatever, to start to look more attractive and look like there's more of a rotation into them. What are the ETFs that people can look at to cover those different sectors, and they can compare those charts?
Well, remember, it's not just the sectors, it's the countries too. So first thing we want to do is we want to look at every single country in the world, every single one, emerging markets and developed, Asia, Latin America, Europe, right? Every single country on earth priced in local currency. And then we want to do the same thing with all the ETFs priced in US dollars, right? So that's the first thing we're going to do. Then we're going to do the exact same thing for every commodity in the world, right? All the base metals, all the precious metals, energy, agriculture. Where's the strength in commodities? Then we're going to do the same thing in interest rates, all of the interest rates around the world, all of the yield curves, so we see what's going on in the bond market. Then we're going to look at all of the intermarket relationships between all those asset classes around the world. And then we're going to come to the United States, or if we're in India, we're going to go to Indian equities. Or if we're in Canada, we're going to look at the Canadian equities, depending on the country in question. In this case, let's just call it America, because I know you guys are in beautiful Detroit. And we want to go index by index, S&P 500, Dow, New York Stock Exchange Composite, NASDAQ, small caps, mid caps, micro caps, value line index, every single one, right? Then we're going to go through the sector indexes. Utilities is XLU, healthcare is XLV, staples is XLP, financials XLF, XLK. Go through the whole slew of them. But what I think gets forgotten is that you have the sector ETFs and the sector indexes that they follow. But underneath that, you have the industry groups. So for example, in healthcare, you've got the XLV. Great. But within healthcare, you have all kinds of different companies. You've got pharmaceuticals. You've got medical equipment. You've got managed health. You've got biotechnology. These industry groups have nothing to do with each other, but they all fall under healthcare. And the truth is, these medical equipment stocks are more technology than they are healthcare, right? You want to look at energy, for example. You have all kinds of different energy companies, oil refiners, explorers and producers, the integrateds. You know, you have so many different kinds. When you talk about financials, you have financials. Berkshire Hathaway is the largest component of financials, which some people don't realize. So within financials, you've got broker dealers, exchanges, regional banks, insurance stocks, all kinds of different companies. So not just the sectors, but the industry groups too. And then once we decide, hey, we want to buy insurance for whatever reason, hypothetically, it's probably because we like stocks in general. We like US stocks. We like financials. And for whatever reason, insurance stocks are showing relative strength, whatever it is in that scenario. So let's say we decide that we want to own an insurance stock, you know, whatever. I was going to say Chubb. 95% of the reason why we're buying the stock has nothing to do with that chart. It has to do with the other 5,000 charts we looked at that led us there. It just so happens that that particular stock is the best way to express that thesis in the market. But it's not because of some fancy pattern or some lagging indicator crossing over another lagging indicator, like all these moving averages, and you got all these. This is the silliest thing I've ever heard. None of that stuff, right? It's a weight of the evidence, and you have two choices. You can come to All-Star Charts and we do it for you, or every week you go through all 5,000 charts in the world. Every single week, you put on some music, you pour yourself a cup of Joe or a glass of wine, depending on what you're into and what time of the day it is, and you just start ripping through them. And by doing that, you know, there's no way around it, right? There's nothing like putting in the work. I promise you, you could spend all day trying to build a robot to do it for you. Most people do. Most people fail. Pretty much all of them fail. I encourage you, don't build a robot to do it for you. Just do it. Or come to us and we'll do it for you, right? Either one is fine, but like you got to put in the work. 5,000 charts a week. There's no way around it, Neil.
Got it. So market breadth by definition is this is just looking at comparing different financial markets and then sectors within those markets, and then seeing divergence and convergence, right? Is that a decent definition?
And then you're seeing, and then it's all about putting the pieces together because like, okay, fine. So why are we looking at all these asset classes? Well, we're seeing the base metal. We've been seeing the base metals breaking out to new highs. Aluminum, zinc, copper, nickel, tin, lead, right? Breaking out to new highs. What else are we seeing? Emerging markets have been outperforming. Like, doesn't all of that make sense? The base metals have been outperforming the precious metals. Interest, that screams higher interest rates. What have we been seeing? Higher interest rates. What do higher interest rates also suggest? That banks should be doing well. Regional banks should be outperforming. And what's been happening? Regional banks are outperforming. Banks are breaking out of multi-decade bases. Like, so the intermarket relationships looking globally confirms or diverges from what we're seeing in the equity markets. You know, for example, when interest rates broke out above 3% in September and October of 2018, the copper gold ratio was rolling over. Regional banks versus REITs were rolling over. They were calling fugazi on the interest rate breakout, and everyone was like, wow, interest rates are breaking out above 3%. And I'm like, copper's kind of saying no, and regional banks are kind of saying no. We should probably be buying bonds, not selling them, and selling stocks instead. And sure enough, stock market collapsed, bonds ripped. It was a failed breakout in rates. And you would have known that had you gone through all of the other charts, because base metals were saying no, rates are not going higher. Precious metals agreeing, regional banks agreeing. So the bond market was wrong not wrong, but a little over its skis, if you will, in that, right? 'Cause prices are never wrong. But those divergences catch up to one another.
Wait, yeah, JC, can I jump in with a quick question here?
No.
So, okay, never mind.
What's up?
So we've bounced pretty hard here this morning. Also, I mean, we dipped there pretty hard at the open, but we are well off the low of
In what?
The overall S&Ps.
In the S&P 500, okay?
Yeah. So looking at the S&Ps, looking at this balance, it's early yet, but how would you think about that? And how would you approach the S&Ps now? Knowing we had a bit of a shakeout at the open, and we are at least on the SPY. I mean, we are well off that low of the day now, right? So,
yep.
How would you approach this now? Would you see that dip down to 380 on the SPY and say, "Oh, that was a washout"? Or,
well, here's what I think. I think you trade the averages, you're going to get average returns, right? That's how I learned it from a wise Egyptian man. So I would encourage investors to not do that, not day trade indexes. Like, that's like the hardest thing to do in the world. Like, that is so hard. In my opinion, you're much better off owning the relative strength. Like, while people are like worried about like S&Ps and whether it's a washout, financials are breaking out to new highs. Financials are making new all-time highs. JP Morgan, Berkshire Hathaway, XLF, regional banks. So like, I think it's more important to focus on what's working, right? And less on the indexes themselves. And if you're going to focus on an index, I would encourage you to focus on all the indexes, not just isolate the S&P 500 because it's convenient. I would encourage you to look at all of the indexes. And again, not just the US indexes, but globally, the S&P Global Index, the Global Dow, the Euro Stock 600, that's, by the way, breaking out of a 20-year base, the Shanghai Composite in China, Australia breaking out of a 13-year base, Canada finally doing well. Think about what's in Canada. Think about why Canadian stocks and the indexes have sucked for so long. You know why they sucked and there was such underperformance? Because they got a ton of natural resource exposure and a ton of financial exposure. I think like 50-something% of that index is natural resources and banks. And why is Canada doing so well now? Well, what's doing so well? Energy, financials, like that's got Canada written all over it.
I just added one more thing, Neil, and then I'll go back to being in my hole. But you'd be hard pressed. JC is a great follow on Twitter at All Star Charts. You'd be hard pressed to find somebody that tweets more about like non-mainstream or maybe global indices than JC. JC just mentioned a bunch right there. He's tweeting about these global indices nonstop. He's not tweeting about the S&Ps. God forbid the Dow, right? That's like the curse word.
I love the Dow. I'm not hating on the Dow. I'm not hating on the Dow or the S&P.
No. I'm saying, but you pay attention to like everything. You do not everything. You're talking about European indices, the emerging market indices, stuff that a lot of people just ignore because the U.S. has been so freaking awesome for the last decade, and you don't.
Yeah, but guess what? Guess what happened the prior decade?
Well, I know that.
When I first got in this business, emerging markets, commodities, that was the place to be. If you weren't in those things, you were losing, right? When I first got in this business, think about this. My first 4 years of my career from 03 to 07, emerging markets went up on average 100% per year. Literally a 100% return on average per year in my first 4 years of my career. And then everything fell apart after that. But now we're back. Neil, Spencer, I'm telling you guys, I think this commodity super cycle is in play, baby. Inflation. Look at 5-year forwards. They're pricing in inflation. Why are interest rates going up? Why are bonds getting slammed? Why are base metals outperforming precious metals? Inflation, baby. Let's go.
Got it. All right. So I hear you. There's one name that I'm interested in right now. OXY. You tweeted there's a rumor going around that they might be issuing warrants.
No, they did.
They did issue it.
They issued them last year.
Oh yeah. So last year. Okay. So are you thinking what does that mean to us? What does that mean to us? We see these going up. Warrants are a company basically giving you a call option, basically saying you can buy these warrants so that we can get an injection of cash right now. And if you decide to exercise it, you can get shares of our company at a price, like a previous low, ideally. That's why warrants are really cool, right? So, and I imagine they can be traded. I've never owned.
Right. Well, that's the point. We're not exercising anything.
Okay. So you're just trading the warrants. You're trading the contract.
It's like an option. You're not actually going to You're not going to take physical delivery of the crude oil barrels, right? Or the live cattle. You know what I'm saying? Like in my New York City apartment, stick with cattle in there, right? Like that's not actually happening. You're just trading the contract. Same thing with the warrants. And basically, just to keep it simple, stupid. Why is JC bringing up the Oxy warrants? Well, I'm incredibly fortunate that I get to talk to a lot of smart folks like every day of my life, whether on a podcast or whether just our own internal meetings. Like our team is full of really smart people. As you guys know, Straza and Rashmi, Ayush and Willie. I mean, just off the charts in terms of intelligence. So just in my own firm, I have brilliant conversations and great perspective as well with our clients. These are monster portfolio managers. These are household names. Obviously I can't mention who they are, but you know who they are. These are the biggest banks. These are the biggest hedge funds on planet Earth. So when I like something, they're like, JC, how much do you like it? And I'm like, well, probably not as much as you're about to buy. But the bottom line is I hear things that maybe for whatever reason weren't on our radar. It happens every day. We even joke about it. Like I always message Straz on Slack. I was like, dude, look at the stock that so-and-so just sent over. And he's like, he just laughs. He's like, wow, how did we not catch that one? It's almost like a game we play. So what's the chatter? Oxy warrants. So this is, just to put it simply, this is the riskiest way to take advantage of higher energy stocks. So it's going to give you, outside of options, right? I guess you can own out of the money calls or whatever. And we do. But if you don't want to worry about that decay that Neil was just talking about before I got here, that theta and gamma decay and whatnot, Oxy, if it's above 25, I think you can own Oxy. I think Oxy can double from here. This is Oxy Petroleum, OXY. And if you really want to get gangster and you want to be in the warrants, just understand that's going to come with some serious beta, right? These things
too complex for me.
These things move, but it's very simple. You own Oxy if it's above 25. If it's not above 25, you don't own Oxy. You don't own the warrants. You have nothing to do with Oxy. But if we're above 25, I think you can own either one. Own the stock, and if you want to own the warrants, again, only if Oxy is above 25, and just understand that you're going to get some juice. You're going to get serious juice. And I know a lot of investors out there are looking for the juice, so the warrants give you that.
Got it. All right. So that was not a new rumor. That was something that happened previously, and you have the opportunity to grab those. Risky, but with inflation, we are going into a commodities uptick. Commodities are in an upward trend now in response to rotation. We're hearing that from JC Peretz. That is probably what was baked into the charts when we were looking at those double bottoms that were pretty consistent across XOM, OXY. What was the other one? There was one that started with an VET, VET, in these energy tickers. They had some nice gap downs. They hit the bottom, and then they closed those gaps. And
I like that VET. I didn't know this one. VET. See, this is a good example of me talking to smart folks.
Right? You like one of my picks, JC?
I do like it. Well, I mean, I like the whole space. So, I mean, I probably like, All
right.
Right. So this is VET. It's a tiny one. It's a small cap. It's less than $1 billion. So talk about juice. This has plenty of juice already baked in.
Okay, cool. So that was, I feel like my dad just said he was proud of me. That was a great moment for me, JC. Thank you so much for coming on to the show on such short notice. To talk about what's happening with market breadth, rotation into commodities, still a theme. You said it a few weeks ago, and it's coming in strong today. JC Peretz from All Star Charts. I mentioned you're at All Star Charts, but JC, where can folks, if they want to hear more from you and they want to continue getting some of the knowledge that you have to share, what you're looking at, where can they do that?
So I'll be at the local bar down the block. You can buy me a beer now. Go to allstarcharts.com. I'm easy to find, allstarcharts.com, and then on the social media interwebs, I'm at allstarcharts on Twitter, Instagram, StockTwits, and YouTube. I'm easy to find, so just shoot me a note, say what's up. If you're interested, I'll send you our most recent report. Our Under the Hood report just dropped. Our 2 to 100 club drops today. So the Under the Hood report are stocks that are showing an unusual increase in investor interest. A lot of banks and energy stocks popping up. So they get on our radar, and then we hand select the best opportunities on the long side and the short side. The 2 to 100 club drops tonight. So these are the stocks that we think are the next $100 billion companies. I'll leave you with one. Check out Real, REAL. This is, my sister works there. Specialty realtor is about $2.6 billion. I think it goes to $4 billion. If the stock's above 30, we want to be long. If it's below 30, leave it alone. Too much opportunity cost, too much downside risk. But if we're above 30, I like this baby long. I think you got 50% of upside. I think it's a $4 billion stock coming.
Wow. Added that to the watch list, JC. Thank you very much, my friend. You have a wonderful day.
Got it. Set those alerts at 30 and a couple of pennies. Buy it on the way up. That's what we're going to do.
All right, man. Will do. All right. Take care, JC.
All right, guys. Adios.
And we're at time, guys. We're trying a new thing today. Each of our streams are at a separate link on the Benzinga YouTube channel. So if you want to tune in to our next show, which I believe we're going to be doing a showcase with Benzinga Pro, just go to the Benzinga YouTube and select that stream to jump in. One thing while I'm still on here, Spencer, is it okay if I talk about Disney really quick? Because a bunch of people are dropping Disney.
Sure. Okay, do that real fast, and then we're gonna end this, and we're gonna start the next stream. So go for it, real fast, real fast with Disney. Yep. All right, everyone's asking about it.
I was doing this like super quickly while JC was talking. This is Disney. We've already hit our breakout for a conservative target, which is our measured move plus the breakout point. We're at it. That's why people sold. All right. Your aggressive target is going to be this pull all the way up to about 214. But this thing's got to blow off steam, guys. This thing's got to blow off steam. There's two ways to look at this. Number one is this thing getting into overbought territory, and is it going to sell off with the rest of the market? People like Disney. People like whatever catalyst is going on with Disney. Are they going to stay at this conservative target and then return to some form of consolidation or a sideways trend before, or a short-term sideways trend before returning to an impulse back up? Or are we going to not bet against all-time highs and say people are loving Disney right now and continue to this aggressive price target, which again is based on this move? Things are looking like it's green for Disney. And if we see a break above this level at 195, a continued close above it, I think you can make a good case over the next week or couple weeks that we might have another strong impulse up, another strong green candle that will get us close to 214.
All right, Neil, I'm going to interrupt you. Go to the next stream now. It's pinned in the comments. Benzinga Pro demo. Mallet.
All right, thanks for letting me do that, Spencer.
All right, I'll be there.
All right, see you guys later.
Hey guys, if you are still here in this stream, hop on over to Trading with Benzinga Pro. I just put the link in the chat. We're doing a new thing today. No more 8-hour videos. We're doing a different video, a different stream for every show. So I see 500 people are watching this right now. I don't know why you're doing that. There's nothing more here for you. You just missed Get Technical. You can rewind the show. But if you want to keep on going with us today, Trading with Benzinga Pro, Ryan Faluna, Jonathan Mallard are going through a demo right now. I just posted the video, the link to that video in the comments. Check that out.